So, welcome to this first IBDA New Perspective web chat. Through this series of chats, we will address a range of design adjacent issues that are having a direct impact on cash usage worldwide. Our goal is to ensure that the international banknote designer and design making communities are aware of these critical issues, influencing demand for cash as a payments tool in the crowded payments market space. As more and more actors enter this market, we must at some point ask, can banknote design support or even enable innovation in the cash cycle and make a contribution to improving how cash is accessed, moved, and used? Thanks to the participation of a diverse range of experts participating in these web chats, we hope to inform and provoke you into developing your own insights and ideas on how your day-to-day work in banknote design can actually do more, directly or indirectly, to support cash. The New Perspective web chat series covers a wide range of topics, from cash cycle evolution to digital currencies and cash sustainability. While it is impossible to cover everything in this short series of web chats, we do hope that we have targeted the big issues that will ultimately have the most significant impact and shape the future cash payments ecosystem. As a design professional, you may ask, why should I be interested in all this stuff? I'm too far removed from the dynamics of the cash cycle to actually make a difference. Well, we aim to change this mindset through the New Perspective web chat series and equip you with sufficient knowledge to start thinking differently, to start thinking about how design can act as an enabler of innovation in the cash cycle. So, gentlemen, if I could ask you to start by sharing your thoughts on whether you believe cash is actually weak in certain market spaces or use cases, and if so, why?
I come from the Netherlands, of course, and here we see a large decline in cash use over the last 20 years. So we can definitely say that cash has had some weaknesses or is in a weaker position than it was previously. But it's difficult to talk about weaknesses. It's more maybe about strengths of different payment methods or payment tools. Cash was, of course, our only payment method for a long period of time, or at least the majority. And therefore, it was the strongest in every factor of payments. With this recent diversification of all these new payment methods, digital and all variations of this, new solutions and new products are created that specialize or are very strong in certain aspects and likely stronger than cash. So it's not as much as cash is weak. It's more that in certain aspects, it's not the strongest anymore. And there people make different choices in different scenarios.
Thank you, Igor. Guillaume?
Yes, I don't think I'll surprise anyone by saying that I don't agree that cash is weak. I'm convinced of the contrary. Yuval Noah Harari wrote in his seminal bestseller *Sapiens*, money is the most universal and most efficient system of mutual trust ever devised. Cash is pretty much the foundation. The Reserve Bank of New Zealand call it the value anchor of today's monetary system. And over time, cash has demonstrated what are unique and unchallenged attributes. It's universal, used by all, young, old, rich, poor. It does not discriminate. Secondly, it's efficient. And through constant innovation, cash has evolved not only in terms of security, but has also adapted to changing consumer behavior. A decade ago, Paul Volcker, former chairman of the Fed, said that the ATM had been the only useful innovation in banking for the past 20 years. 10 years later, we're seeing startups and innovators around the world looking at new ways to distribute cash and facilitate its acceptance. Thirdly, cash is resilient. As we speak, there are over 1 million people without electricity in New Orleans, and they rely exclusively on cash for their basic needs. And last but not least, cash is trusted. And during the COVID-19 pandemic, we've seen this exceptional growth in cash in circulation. In uncertain times, people like to have access to liquidity, to something which is tangible and can be used in all circumstances. In 2020, 75% of the world's currencies experienced a double-digit growth rate of the value of banknotes in circulation.
Clearly, for the online world and the e-commerce world, cash is not an easy tool to use to pay. And I think in the last 18 months, we've seen a number of changes. In no particular order, you've seen retailers actively promoting non-cash payments. That was new. We've seen government promoting the use of cash, changing the payment limits in the UK 15th of October up to £100, but also governments themselves driving the population online to do, in the UK now you can only file your tax return digitally. You cannot use a paper version. Examples of government driving the population digital, clearly more e-commerce, but also pandemic changed behavior because it forced people to have to take a technological leap. Those who were slightly afraid and hadn't tried it actually had a go. So the infrastructure has always been in place not to use cash, but all of those drivers have actually caused a major lurch. But fundamentally, apart from e-commerce and online payments, nothing changed.
Obviously, I don't have as much detailed understanding of the market as John in terms of the financial and usability aspects. But from the sustainability perspective, obviously what we see is that also with the rising of an increased number of other payments technologies, we see that the sustainability performance or the environmental performance, in particular of the cash payments of cash payment systems, is put in question. And I think it's fair to understand what is the level of impacts, and then to try to improve them as much as possible. Although
there's been a lot of discussion recently about the cost of cash in circulation and what's driving those costs, and I think it's fair to say that with improved analytics, central banks and even private organizations now are beginning to have a clearer understanding or appreciation of how much cash costs the various actors. Do you believe there are some specific or single main drivers of the cost of cash in circulation? If we look at the process of moving cash, accessing cash, etc., do you think there are some principal drivers that can be identified and that perhaps could be improved?
I think so. Cost is often also a question of scale. The larger the scale of a system, of an infrastructure, the more efficient it would be, and the lower the cost in general. And that is something which is threatening cash a bit, is this decline in use and therefore cash infrastructure, and then the cost balance changes. When, for example, digital payments started, users were not changing their payment behavior or choosing another option based on cost, because mostly every new payment option is often more expensive at its starting point than the current broadly accepted one. So this question of is cash more expensive and has a higher cost is more now that the rate of digital payment has grown. A real comparison is being made and some questions are asked. But it's at the start, it's not that it was a driving factor for people to make certain decisions. But now we are at this point that people are looking at the cost, and mostly from the infrastructure point of view. So for consumers, there's cost is very important, but the difference between the cost of cash payments or the cost of debit card payments is quite diverse. If you look at different countries or even different areas or which company you use, but it's also not that much noticed. It's more that companies or people who are responsible for creating this cash cycle or maintaining it, there the discussion on cost is, because there most of the cost is well, the burden of the cost is, and discussion is created. So I think there are some principal factors of cash that contribute to its cost, because in the end it's a physical product that needs a physical infrastructure, and there will always be some cost. It will never be something. It's not a product you buy. It's a service that needs to be provided, and these kinds of services always render some kind of cost. So the question is, it's always a comparison, but this comparison is very difficult because the context factors are varying continuously and are dependent on a lot of factors. So actually determining what the exact cost of cash is or the exact cost of alternatives, I think is very difficult, and also dependent on the system borders you draw to make this calculation.
I very much agree. Firstly, I think that most analyses on the cost of cash focus exclusively on the payment function. This is limited and biased. It's limited because cash has other fundamental roles, including resilience, inclusion, protecting individual privacy. It's also biased because if you compare the cost of cash, which has this much broader role, to non-cash payments, it's not a like-to-like comparison. Secondly, measuring the cost of payments is a complex task. And the numerous studies which have been carried out show very different results, depending on the markets, the scope, the analysis, and the methodology. But what is common to pretty much all these studies is cash is pretty much the benchmark against which we measure the efficiency of other payment instruments. When regulators look at intervening or putting regulatory pressure on the price of interchange, which is the business model behind card schemes, they compare this to the cost of cash. So we need to have a proper functioning cash system to be able to have an efficient payment system. And last but not least, on the issue of cost, I think it's also important to consider the cost of not having cash.
Cost is irrelevant, absolutely irrelevant. The cost of cash, you could, if cash were free, to the banks and so on, they would still be driving out cash. You can reduce the cost of cash to zero, and the forces against cash will still drive it out of the marketplace. So I'm not saying, we will talk about cost in a moment and the actions that can be taken, but there are a whole bunch of forces that mean that cash is under a huge pressure. And perhaps we should just touch on some of those but before we talk about cash. I mean, you can start off, the fundamental problem is that cash is seen as a cost center. And for the financial institutions, they're about profit. So cash is not their friend. It doesn't actually, apart from when their customers demand it, cash is something they want to get rid of because they can make profit from the alternatives. There's no champion for cash. Every central bank is neutral. Payment choice, they're neutral. So they won't champion cash. Whereas unlike a Visa or MasterCard or an Alipay, big, powerful organizations with big budgets, they're very coherent in what they do. Cash spread across, the 203 countries or whatever it is, there's no voice for cash. So there's no champion.
Switch the focus for just a moment onto ecology. There's been a lot of hype, a lot of declarations and publications by central banks since the beginning of this year, signing on to different initiatives, including COP, and basically bringing some spotlight back onto the ecological impact of cash moving in a society on the environment. It's something which I think for many central banks is relatively new. I am aware that a number of life cycle assessments have been carried out to assess or compare the direct environmental impact of cash, banknotes and coins in circulation compared to some other payment tools. But could I ask you just to perhaps share with us some of your knowledge and thoughts on the ecological impact of cash?
Yes. So we at DNB do a lot of studies also on this subject. We find it very important, the sustainable factor, and we've done some life cycle assessments, as you mentioned, on different payment tools and also on cash. And somewhat expected for such a physical product as cash, the ecological impact is more significant than of some of the digital payment methods. But what this research also shows is that there is also a lot of possibility for improvement. Most of the ecological impact of cash can be found in the infrastructure, and then mainly in the transport of cash through trucks or CIT companies or this logistics. Another significant part of the ecological footprint is the ATMs, so the electricity and the maintenance of this. What was interesting is that the production of banknotes and coins is relatively a lot lower than sometimes expected. A lot of people, when they talk about cash, they say it as the production of the metals and everything is wide, sometimes seen as less eco-friendly. Although there is a significant way to improve also in the production, the infrastructure is actually more relevant to focus on to improve this ecological footprint.
There are some, I believe, some pretty low-hanging fruit type solutions, some of which are starting to have already started to be implemented. Optimizing cash and transit routing, switching to hybrid or electric vehicles, reducing energy consumption of ATMs. There are, particularly in India and in some areas in Africa, there are now solar-powered ATMs. Simply adding a switch, on-off switch to an ATM, turn them off when they're not in use. So there are relatively easy to implement solutions. But there's also a third aspect, which I don't think is being looked at sufficiently. And we can look at life cycle analysis, looks at the environmental impact of production distribution of cash. But cash as a form of money encourages or facilitates economic behavior. And what if we could design cash that actually encourages more sustainable economic behavior? There's already research that shows that digital payments encourage, for example, consumption of unhealthy food. Sociologists call this the pain to pay and conclude that when shoppers pay with cash, they pay more attention to the health risks associated with the items they buy. And therefore they'll reduce the consumption of unhealthy junk food, cookies, candies, and whatever. Research also shows that shoppers are usually willing to pay more with digital payments. So I think this would be a fascinating area of research. Could we actually devise a form of money which encourages not only healthier consumption, but a more sustainable form of consumption? And I think perhaps design could play a role. We all know that banknotes, coins, are a vehicle messages. Well, maybe we should add more messages on the issues of sustainability. And when I talk about sustainability, it goes beyond the aspect of environmental sustainability. I'm talking about sustainability in the broad sense, encompassing social financial inclusion, encompassing financial and economic stability. And these are obvious things that money should represent. But the environmental aspect is obviously becoming more and more important. We have now central banks which are adding the environmental sustainability as one of their policy objectives. Well, how can we reflect this on our future banknotes?
Yeah, I think it's a tricky question because it's a multidimensional problem or issue, if you will, in the sense that when we talk about ecological impacts, we need to define what it is, and I think it's important to realize that actually there are very different environmental impacts that a product in general or a system such as the cash payment system can have. So now, how much is that? So if we look at carbon footprints, and also due to what John mentioned in terms of data availability, or maybe an issue with data availability when it comes to the characterization of the cash payment systems, there is a certain range of impacts. But if we look at the most recent studies that have been conducted and really focusing on carbon impacts, to give an idea, impact range from 5 to 25 grams of carbon or CO2 equivalents. I'll explain that later, per transaction. So really, this is whenever everyone performs a transaction with cash, there are between 5 and 25, and sometimes even more, depending on studies, CO2 grams of CO2 emitted in the air, so ending up in the atmosphere. So that's the range of impact that we see from the studies that have been conducted by different banks and different institutions. Just to give you an example, I've done the comparison in one of our studies to get a sense of how much is how much is 5 grams of CO2 equivalent per transaction. We compare that impact to the impacts of the product that you purchase through that transaction. And it's interesting to see that if we, for example, if we look at food products, just to give you an idea, the impacts or the carbon footprints of food products range from approximately 0.5 to 20 kilograms of CO2 equivalent per kilogram of product, which means that, given that an average meal weighs around 1 kilogram, maybe a bit less in certain countries, a bit more in others, but around 1. So we would have, given the average composition of a meal, at least in France, that's the data comes from the French Environment Agency. The carbon impact of an average meal is around 2 kilograms of CO2 equivalent. So if you take the assumption that with a one single cash transaction, you purchase your meal, then it's let's say around 20 grams of CO2 equivalent to be compared to 2 kilograms of CO2 equivalent. So it's around 1% of the purchased product's carbon impact.
Could we switch now a little bit into sort of the bigger picture and talk a bit about cash cycles or the sort of ecosystems within which cash moves? There's a number of pieces of research out there which suggest that evolution in cash cycle models, starting with way back in the 1900s, has shown that the increased level of automation introduced into cash cycles, perhaps triggered, first of all, by the introduction of ATMs, has in itself increased the level of friction associated with cash and the level of cost associated with cash, and that we may be on the verge of a significant shift or change in cash cycle models in certain countries around the world. Is this something which you have looked into, or you have some views or thoughts on a fairly radical change or change in direction or approach on cash cycle models?
Well, with cash cycle models, you can look at it from different perspectives. So one is if we talk about optimization, and if we look at sort of from a designer view, from really a high up view, what would be the most optimal system and the most cost efficient system we can create.
Okay.
But what you also mentioned is something about the market. How can we create a market in which companies can create business models or new ideas or products that are supported and match the demand from a user side? And I think those do not always overlap. So at one point we are trying to create the most optimal system, but at the other point we're also trying to create or should create a system where the market still functions properly and create services that are used a lot and well, simply say they work. So I think you have to look at both sides to create a cash cycle that is, as Graham mentioned, sustainable, financially, ecological, and also on different levels of cash use. And that's a balance of a lot of factors. And indeed, what you mentioned is that there's a lot of different models out there, ideas to do this. And I think we're still at the start of implementing new ideas and changes in the cash cycle.
There are as many cash cycle models as there are countries, and actually there can be room for several cash cycle models in the same country, I believe. So one, there's no optimal model. Secondly, I don't believe that the optimal model is the most cost efficient. The optimal model is a cash cycle that ensures access to cash, that ensures acceptance, and that ensures a level of resilience. We have seen, and then the next question is how do you achieve that? Well, there have been all sorts of changes and incremental changes carried out in all sorts of countries, and we've seen countries shift to a more utility type model, then shift back to a more open market driven model. It depends on the market. I do believe, however, that we're not investing enough in research and innovation. We need to better understand. We still have a very weak understanding of how cash circulates throughout our economies. We need to invest more on understanding that. We also need to invest more and foster a spirit of innovation. Yes, there are probably better ways of moving cash around. There are probably better ways of distributing it, but we need to invest in that innovation. I think cash tech is one area that can provide solutions, but we need to dedicate more resources to that.
As future cash cycle possibilities, we can see a definite delegation of cash management responsibilities and activity down to the retail layer, retail and consumer layers, with a little bit of bypassing of the role of the commercial bank and a significant change in the traditional roles of the cash management companies as the retail layers start also operating not just a business to consumer, but also a business to business service in terms of moving cash. Is this something you feel is imminent, where even the traditional roles of the existing actors in cash cycles are on the verge of change?
If it's beneficial to the cash cycle or the functioning of cash within society, I don't think that some roles that are changing a bit is always detrimental. If indeed there are some shops that have excess cash, and there are shops at the end of the street who need that cash, I think it's up to innovation to see if we can facilitate this more efficiently than having trucks go to the one shop, picking it up, going to a central location, and again riding the same route back to deliver it a few hundred meters down the road. So I think within the distribution models and the cash cycle models, there might be indeed some shifting, but it's all dependent on what the benefits are and also what the burden is on different actors. And it should not be a way for current actors to reduce their responsibility, if they have that, on supplying access to cash.
Guillaume?
Yeah, I think it's not a new trend. It's something that's been occurring over 10 or 20 years, depending on which markets we look at. Will it continue? I think there are a number of things which will come into play. One of the things that we've been seeing in many mature economies is commercial banks reducing their physical footprint, ATMs, bank branches, which basically reduces the number of cash access points. So it raises the question as to whether retail can compensate that reduction. And yes, it's been accelerating, I'd say, over the past few years through different types of solutions, cashback, cash in shop, various types of cash tech solutions. I think we need two things to make this work. One is we need to get the regulation right, because the shops, the retailers, are not subject to the same regulations, for example, in terms of counterfeit detection, or in terms of the quality of banknotes they distribute, not subject to the same regulation as banks. The second aspect is we need to find the adequate business model. It has to be beneficial for the merchants, for the consumer, and for society as a whole. And we're still looking for the optimal solutions, I think.
But generally, if those alternative systems or those changes and innovations that are foreseen at the moment, so if these changes can bring a significant reduction of either the use of ATMs or the factor of, can also improve the overall logistics, or can increase the quantity, the amount of cash that is transported by the IT companies, for example. These are the drivers, and where there is really room for improvement. One warning, however, there is in that type of studies, there is usually quite a certain level of uncertainty on the user behavior. So we would need to have a detailed look at how users would behave with these alternative systems, or the new cash payment system, really to be confident in the results. And sometimes you have really a large uncertainty on the specific aspects of the use phase, and this is really also true for cash.
I think one has to embrace and congratulate and be glad that these initiatives are happening. And clearly these companies are existing because people are starting to use their products. So that is fantastic. I don't see them as a like-for-like replacement of ATMs. They are a poor second best. And I'm going to quote my mother-in-law at this stage, a lady of a certain age, who will not take out cash from the post office because it's none of the damn business of her neighbours who work in the post office how much cash she's taking out. She goes to an ATM or goes to a bank, they are covered by privacy law, and she will not use the post office or cashback or any of those tools. So, you know, it is a substitution. It's good for those who are into it. But let's get the ATM sorted out. And we had DBS Bank in Singapore on a webinar yesterday going, their new ATMs are 52% less, used 52% less energy than the one it replaced. It takes 40% more notes, and they're just experimenting putting solar power to start driving some of the energy for that ATM. You know, let's invest in things that we know that work and embrace the alternatives for people who are ready to use them.
All studies show that this is really an important portion of the impacts coming from ATMs, mainly the electricity which is used by these ATMs. So there are basically two ways to reduce. Either we reduce the number of ATMs, or we try to improve the ATMs by either improving their energy efficiency or by switching to green electricity or to renewable electricity, which would be low carbon. So that these are the three ways we can improve ATMs performance within the.
Just to suspend disbelief and go with my vision for a moment. So if the retailers decide that enough of the public will require to use cash, then it's worth their while investing. And so if the central banks will review their sort of note held to order schemes, their note circulation schemes, to make it cost efficient and safer, then you can start having smart safes, telecash recyclers, telecash dispensers. You can put the infrastructure at the front end in to allow recycling, to reduce the movement of cash. You can have modern ATMs. You can have your renewable energy. You can have standardized reusable containers throughout the cash cycle end to end. And if you then look at your access and your deposit infrastructure, from retailer to whether it's a post office or to a one banks or post office in the UK, there's their cash hub facilities, shared facilities, through to your utility ATMs that have deposits.
Are there any initiatives or technologies that spring to your mind that you feel are currently doing a good job to support cash sustainability?
Yeah, you can look at a few different areas, I think. So starting from the production of the banknotes and of coins, there's a lot more. Looking at the procurement of the materials, sustainable cotton, for example, is something that has increased a lot of attention recently to improve the footprint. Also, changes in material use to improve the longevity of banknotes, I think are all very good innovations that improve the sustainability of cash on a product level. On an infrastructure level, what you say is yeah, there is a lot of innovation and new ideas and changes within tech companies or cash tech companies, which I think shows that there is possibility for improvement and also interest from the market on improving this, which shows that there is still potential, and we will see, I think, a lot of new interesting things still to come.
If you really want to have an impact, it's all about renewable energy in your ATMs. It's funny enough, telemetrics for measuring CIT trucks, and there's a whole raft of work going on about that, and they've really major reductions in how much fuel they use when you start measuring stuff.
Can design actually become an enabler, a facilitator, a supporter of change, positive change and innovation for the cash cycle?
As I said earlier, and I don't know how to do this, but I think it's something that would warrant further thinking and research, is how can we, using design, create money which encourages more sustainable behavior. Following this now, what is it, 18, 24 months of pandemic, I think there's also the question of can we use banknotes, but not only banknotes. You could think there are other instruments. There are ATMs, for instance. Could we use ATMs to provide messages on health precautions, sanitary precautions during a pandemic? I think, and again, I'm not saying I have the solutions, but I think the communication capacity of banknotes and coins warrant research on whether we could use them to transmit different messages.
I would add that what we see in other sectors is one really efficient way to reduce the impacts is to what we call to eco-design products. So really to and that's a general consideration, but applied to cash systems, that would mean that we would need to eco-design CIT trucks, maybe switch to hybrid or hydrogen or alternative energy for cash transport. There might be still room for improvement, maybe in certain countries, to optimize the logistics. Although in most industrial countries, we think that it's already perceived as quite. I mean, the efficiency is already quite high. Eco design could be applied to ATMs. So obviously, John mentioned the green electricity, but we could think also of designing more efficient ATMs. With idle mode, etc., could make things even and reduce the energy, whatever energy it is, reduce the quantity of energy, the amount of energy consumed. And also, again, using that eco-design approach, we could try to prolong make as much as we can to prolong the lifetime of coins and banknotes. Because that's one of the key issues, especially for resource consumption, to reduce that impact on how much natural resources we extract from the earth.
But I think ultimately R&D needs to work with design to rethink how it works with almost the point of sale terminal. I mean, if you want me to have a little brainstorm with you, we all know that 70% of banknotes don't circulate. So could we design the store of value banknotes differently? How do we get banknotes, the transaction banknotes, to work with the point of sale equipment so it can be scanned in some way? And so we captured the damn data. We've got all these apps. How can we get the banknote to behave differently? If you and I won't make any friends saying this, but can you do just-in-time production and have a lighter footprint? I think it's an enormous opportunity for my friends in Komori and KBA when I say that statement. But I think just day to day there's a relatively small envelope of opportunity. But actually, if we step back, there's a lot of opportunity. R&D and designers working together.
Points in other sectors we see eco-design as a really efficient way and procedure, if you will, to reduce the impacts. And why is it the case? It's because it's really at the design phase that you have more leverage and the more possibilities to reduce the impacts, because you have everything at hand to, for example, to improve the energy efficiency of products, etc. While once the systems and products are designed and the design is let's say fixed, you can still have some room for improvements on for example, to optimize the logistics or the way things are then handled on the field, but really the design is one of the key phases of product developments where you still have more room for improvement, basically. So that's really a key thing to incorporate in the design of new systems.
I've really just two other questions. One of them you've both touched upon in the last few minutes, and that is the whole issue of consumer choice in terms of payment tools. And we referred, or Guillaume, you referred to how communication and misinformation created a form of stigmatization of cash during the pandemic. And as some observers would say, it didn't really bring about a new wave of change. It simply accelerated the wave of change that was underway. So in your personal opinions, this stigmatization and this shift away from cash by certain sectors of society that took place during the pandemic, do you think we'll see a return to cash by these members of society, or do you think the damage has been irreparably done?
I think it's been a speed up. So we've seen some recovery also already. So some of the people who are hesitant at the start, through information that came out again, trusted it and started using it again. But we also have seen on the long term a rapid further decline. I don't think that it has scared away or people who would otherwise never have reduced their cash use. So it's more likely that it has increased the speed of decline, but not changed the people who are declining their use of cash. And I think the point of free choice and consumer choice, that should always be, I think, the one of the main motivations in for central banks and for governments, because that ensures choice and also some form of competition, alternativeness. A robustness is inherent if you have multiple choice systems. Another way to say it is it's not as important how many people use cash, but how many people are able to use cash. So even for people who do not use cash, the existence of an alternative payment method, of a robust cash system, of a way to access central bank money is still very much important, even if they almost never use it.
Interesting, Guido. Guillaume?
Yeah, I think we're facing this dominant narrative that we're heading to a society without cash or with less cash, and it seems that the only real question is how fast will cash disappear. We've seen during the pandemic an acceleration of what some now call the cash paradox. So people pay less with cash, but they use it more as a precautionary holding, as a store of value. And we've seen this happen at unexpected and unprecedented levels. There has never been so much cash in circulation. So let's just correct the fact that there's less cash. There's more cash than ever before. It's been challenged strictly on the payment function. But if people store it, it shows that they have trust in it. Mm-hmm. Looking at the future, I believe in a non-deterministic approach. And COVID, if anything, has marked a return of more diverse futures thinking. It's highlighted the need to retain agency when we look at multiple plausible futures. I think that we, as an industry, should aim for a monetary system which is fair, inclusive, non-discriminating, respectful of individual privacy, and resilient. For me, that includes cash. And now it's for us as a community to make sure that that happens. It won't happen on its own. I think we need to act to ensure that it does.
I think it's been really interesting, and I do thank you very much for an excellent exchange and flow of information. But I would like to wrap up with one final question. I think everybody has a slightly different answer to it, but you received this list of questions a bit earlier on. But who do you believe will be actually using cash, let's say by 2030, and why?
I think one group, and which is also the most important to support, are the people who are dependent on cash. I think a recent study in the UK already showed the large group of people who are, for sometimes different reasons, dependent on the use of cash. Is it financial inclusion or budgeting or all these different kinds of things? And what it also shows is that it's not just a factor of age, which is sometimes misstated, that it's a continuously older group of people, and well, in 20, 30 years, this group that is dependent on cash has disappeared. This is not the case. The dependency on non-digital means for financial inclusion and financial independence is continuously and will also be the case in 2030 still. So that would be a very important group of people. And secondly, I also think people who want to use it. And what was also stated is it's maybe not only as a daily payment tool, but also as a store of value, or as a person-to-person payment tool, or on the argument of privacy. I think there are still a lot of reasons for people to want to use cash. And I think more and more cash use and people who use cash will be focused with these groups. And for us, the challenge is to make sure that everybody who wants to use it is able to.
Okay, that's clear, Igor. Thank you. And Guillaume?
My short answer is you and I, Mark. I'm pretty sure that you and I will be using cash in 2030. I hope there'll be a bit more of us. And I think the way cash operates today is it operates as a mainstream payment instrument. And I think we need to be cautious. I fully agree. Of course, there are those who depend on cash and those who prefer to use cash. But I think it's important that we maintain this universality, meaning that we need to have a widespread acceptance. We need to have almost all communities using cash. And again, I think that's the challenge for the industry. I think we potentially there is a risk that cash becomes marginalized, be used by those who are unbanked or those who are very cautious with their privacy. But that is not the way the current business model operates. We need to have this widespread adoption and trust.
There are two groups who will use cash. So I segment the market into the super wealthy, the wealthy who don't use cash, the majority who can use cash or not use cash, they don't care, and then the group who must and the group who choose. And the choose people are people who want privacy or criminals, but are people who want privacy and have a problem with not using cash. But those who must and those who choose will still be using cash in every society, in every country, and it will be a large number of people. And the second is store of value. Because all this talk about central bank digital currencies or even Bitcoin and all that, the Ether and stable coins, is in a sense a nonsense. if you want to hold value against an emergency, it has to be to hand and readily exchangeable when something unexpected has happened. A digital solution does not tick those boxes. So if the state has got to maintain cash, because what's the alternative? Somebody else's cash or gold? So those people who are rushing off to a digital future need to think extremely careful about the legitimate requirement of society to have a store of value. And that is still banknotes.